Hello everyone, I hope you're okay. Let's start our usual analysis for gold for the 25th of October 20, sorry, 2020, 25th of October 2023. And let me share my screen with you. Okay, starting with Forex Factory, we got Wednesday, which is 25th, and we got some news at 1:30 a.m. That is after around about half an hour UK time, and then we got Euro having back at 9 a.m. At 3 p.m. we got CAD and USD medium impact, and 3:30 and 4 p.m. we got CAD have impact. 9:35 p.m. we got USDA have impact news, and 4 p.m. sorry we have CAD as well have impact. So 11 p.m. we got AUD have impact news as well. So there's quite a few news with different pairs depending on which pair you trade. But these days, it's maybe a good idea to avoid gold, or if you want to take a risk, take a smaller risk because it does not, it may not move technically because the Middle East conflict is affecting the gold price. Technically, gold should fall, which we will see in a minute, and let's see whether it will do or not. Okay, let's so go to Dixie and see what's happening in the Dixie. Earlier on, I said this level here. This level was market is rejected from here, and as you can see, market is rejected from it. And gold, funny enough, the gold went up as well, and the Dixie as well, because as I said, market these days not moving technically. Again, normally Dixie and gold prices are opposite to each other, but this days it doesn't happen. So let's see. Let me remove these levels and I can draw fresh levels. As you can see, this we have these levels. This is 15 minutes, so let me go to higher time frame. We can go into two hour, and as you can see that these are the levels, and market should respect these levels. And going to daily, we can see what's happening here. Now it looks like this Dixie will move around, move in this range, and if it breaks this level, then there's a possibility of breaking this as well. Also, we can expect on the breaking of this level, sorry, right, on the breaking, sorry about that, breaking of this level, we can expect the market to further come down. And now it breaks it's this level. If it's broken this level, we get further to the upside and so on, different levels. So this is how the market works. We have to go step by step, level to level. Right. And now going to daily, this is the daily pivot level of gold, as you can see here. Around 1970 is the pivot. These pivots are not always correct. They give you an estimate, but if we coincide with support and resistance, this becomes the pivot level here. Okay. Now we should expect the market to come to around 1977 and onwards, because on 4 hour and on 1 hour as well, you can see big rejection candle here, which indicates the market. Let me remove this. It indicates the price should go to the upside. So it definitely can go to the high, which was made on 20th a week ago. So it can go up to here once this level is broken. Let's see. Technically, as I said, gold should come down. And now let me explain to you why. Okay. So going to daily, we got strong level here. And if we put a Fibonacci from there, right, this Fibonacci level, the market should come around 1900, between 1900 to 1924, the market according to this Fibonacci level. So let's see whether it happens or not, because as I said, because of the war, we should see the market going to the upside from any level. This is a level as well. So, and as you see in 4 hours, there's a huge candle has been made. Even in 6 hours, this is a candle. 12 hours, this strong rejection from here. So in this kind of situation, where when the fundamental is especially on gold, fundamental have a great effect on it, and we have to be very careful. So this is another, or if the market reverse from reverse to the downside from here, we got this order block here as well. And it's possible it makes double top here and then come back, which is M pattern. So in smaller time frame, we can always take short-term entries, like in 15 minutes. And as you can see, there's this was an entry and breaking of 1, 2, 3, 4 candles, and there was a level here. This level. So market respected this level here. That's another level. So as you can see, this level level to level trading is the best way. I mean, now by looking at this, what is happening now in the chart, price action and movement of this, it in fact it should go up to this level, which is around 1977 level. And from the breaking of this, then we have this level. And if it comes down, which is most high probability of coming down from here rather than from here. So always takes some profit along the way. Don't just keep your full trade running all the way, because unless you have very good confirmation and there's no fundamental going on. So at the moment, we have to go with the fundamental as well. As I said, in gold, it has a heavy impact. All right, I hope this is useful. I leave it for now, and I hope you all have a good trading day. And thank you very much. Have a good night. Bye-bye.